Hi, and welcome to Awesome Accounting. My name is Lai, and today we're going to discuss long-term gains and losses with business use assets. Section 1231 is part of the IRS code that has favorable tax advantages. Basically, any losses are going to be considered ordinary losses that you take against your net income, and any gains are typically treated as capital gains, which is taxed at a lower preferential tax rate. We're going to discuss Section 1231 and its subsets, Section 1245, Section 1250, and Section 291. Section 1231 is going to apply to any assets with gains or losses that have been placed in service for greater than 1 year. There are a couple of different subsets within Section 1231, so here's how I look at it. Section 1231 is kind of like this giant umbrella over here. Then within that umbrella, there's Section 1245, Section 1250, and Section 291. So we'll look at Section 1231 a little bit later, but let's look at Section 1245 right now. Section 1245 is only going to apply to gains. Any losses are going to be recaptured as Section 1231. You're going to recapture 100% of the accumulated depreciation taken as ordinary, and then the remaining gain is going to be a 1231 gain. So why are we taking 100% of the accumulated depreciation as an ordinary gain, as ordinary income? This is because when the item was depreciated, the depreciation was written off against ordinary income as an expense. Section 1250 applies to real property. When I think of real property, I think really expensive. You might think of a warehouse, you might think of an office building, you might think of maybe some sort of funhouse club for kids to play in. Pretend this is one of those really expensive kids' playhouse center things. Section 1250 applies to both C Corps and individuals. If you're not a C Corp, you'll be considered individual. So they're both. Section 1250 looks at essentially the same thing, but treated a little bit differently. If you're an individual, you're going to be looking at the recognized gain versus the accumulated depreciation. If you're a C Corp, you're going to be looking at the recognized gain or accumulated depreciation. You're going to be looking at the recognized gain or accumulated depreciation at straight line depreciation. So you look at both of those values, you're going to pick the lesser amount, take 20% of that and tax it at 25%. This is non-preferential. Then the remaining gain is Section 1231, which is going to be preferential. Section 291 is only going to apply to C Corps that have buildings placed into service pre-1987. So think of Section 291 as a subset to Section 1250 for corporations. You're going to look at the exact same thing you would look at for Section 1250 for any other buildings. You're going to look at the recognized depreciation and accumulated depreciation taken at straight line. The only difference is you're then going to take the lower amount and tax that at 20%. The rest is going to be a Section 1231 gain. Section 1231 has a 5-year look-back period. This means you're going to look back at the last 5 years to see if there were any ordinary losses. If there were any ordinary losses, you're going to offset the gain this year with the losses from the prior years. Let's say last year you had a Section 1231 loss for $10,000. That reduced your net income by $10,000, which is $10,000 you weren't taxed on. This year, let's say you had a Section 1231 $50,000 gain. That's $50,000 that's going to be taxed at a preferential tax rate. Because there was a loss in the prior year, this year the government's going to want to recapture that by saying, you actually didn't have a $50,000 gain, you had $10,000, which you need to recapture as ordinary income because you reduced your ordinary income by that amount, and you have $40,000 as your capital gain. All of your Section 1231 is going to be netted, which means any Section 1245, any Section 1250, any Section 291, they're all going to be netted against Section 1231. If you have a loss and your loss is Section 1250, and that loss is greater than Section 1231, the entire Section 1231 is going to be taxed to that higher 25% amount. Thanks for stopping by.